Okay, so we've got 20 or so seconds until a decision. Now remember, the big focus is going to be on the dots here. That's the main thing to be watching out for, and whether the Fed can drop the dots, particularly in 2019, to 2.4. That's going to be the big change. We've got the S&P trading around 28.26, T-notes trading around 122.29 currently, and we're about to get the decision. So here it comes. There we go. Dots cut 2.4, 2.6, 2.6 for the 2020 and 2021. So much bigger cut than expected. The T-note jumps instantly above 123. Bit of a pullback, and then starts to trade higher once more. The S&P again also whips back towards 30s before starting to continue. Now you start seeing the faster move coming in. T-note's now pushing for its highs. S&P struggling up towards its highs. Now remember, S&P was the one that's perhaps slightly less set up for a move higher. The T-note at this point is now pushing up towards the 123.08. So very clearly got out of the 122.31 range up towards 123.08. That's the first area of resistance that you're looking for. We're seeing the S&P having multiple pullbacks. Really, we've not moved very far from 28.30s. The T-note very much holding on to the initial move as well now, whereas the S&P, we're still trading around similar areas. The T-note has pushed on up from 30s up towards 05s, 06s. The S&P once again back towards 28.30. We've seen a lot of washing back in the S&P. Comes back to the area of high volume around about the 28.30 and a half. Is 27,000 traded, you can see in pink. So very high volume trade there, and we are staying above there. So from the S&P point of view, it's still got a valid move to the upside, but it's struggling in its nature. Whereas the T-note, if you've got in, because this is more set for a move higher, it's a market that once it started the move is then sustaining this move right at its highs. No real pullbacks. We're seeing 3,000 lot chases up and pushes the market right up towards those 08s. You note as well, we've got 6,000 lots sitting at 08s. That creates a bit of resistance. It's already a resistance level anyway. So the large order is then capping the market right at a point where people would perhaps be considering taking profit anyway. So from that, you're then going to get this slowing down in the T-note because you've hit a decent resistance. Also, there's a large order there. So if you were long, think about what you'd be doing. If you were long going into this, you'd be looking at that large order and thinking, okay, maybe we'll take some profit here. The S&P now breaking through the highs around 28.36. We get this quick little push up, rather low volume traded around 37s, and this allows the S&P then to keep the move going. Whereas the T-note now starts to fall into a consolidation. But unlike the S&P, you're not seeing the T-note pulling back very far, and that's the distinct difference. Where the S&P, as it moved up, it would have quite big washbacks each time it pushes on through the highs. So now trading 39, it then still washes back. Even if it's only a handle or two, it's constantly not sustaining a move up. It's always washing itself back, washing itself back. The T-note, on the other hand, back up to 08s, sitting rather steady up in that area. And what you can see, as you can see from the charts, the T-note then goes through a phase of just consolidating, building value up at these higher areas, but ultimately doesn't pull back any more than about 2 full ticks. So it stays very, very stable, very rigid towards the top of its range. Whereas the S&P, if, for example, you were buying this as a breakout type move, the S&P continually pulls back on you. So if you try to buy this into the high each time, the S&P is then going to start pushing back. And this is because you're running into hurdle after hurdle after hurdle to the upside in the S&P. Main focus at the minute for most people is going to be 41.25 in the S&P. For the T-note, what most people are going to be looking for here is a break through that large order. Once that large order breaks, that should then set you up for the continuation, and that then starts to target 15s, 16s, 18s area, and then the much larger continuation over the following days. But that's going to be how people are thinking about this now. We're nearly 5 minutes after the decision. Markets have steadied up. This is where the liquidity comes back. You see how much thicker both markets are already. Liquidity's come back. The T-note's not progressed beyond 8, but we are still seeing it holding up at the highs, whilst the S&P, every time it ticks even a few ticks higher, begins to struggle. As a result of the S&P struggling, what you'd be looking for now is more of a pullback situation, waiting for the market to drift backwards to try and get in. So this is where you're trying to apply your more passive entry to this trade. Remember, this is a market that's running into obstacles. What you don't want to be doing is buying into the highs as it runs into hurdles, whereas the T-note just trading through 08s now we're getting to a situation where we could be looking for a further continuation. Doesn't do it straight away, so this then again is where you're going to be falling back now. We've had a bit of time to consider what's been going on. It's time to now start thinking, okay, we've got a bit of a pullback. Where exactly do I put my stops? At what point do I think I'm actually going to be wrong on this? And for the S&P, where I'd be thinking now is somewhere below 36s. For the T-note, you're still going to have to see, it's not so clear structurally, maybe even as far as 03 before you really start to feel that you're actually wrong on the trade. Yes, we've seen a little failure above 08s, and we're now looking for this volume to build. As long as you're not seeing any reason to be exiting the trade, you've still got valid reason to stay in it and look at it from that point of view, particularly when you're playing a continuation type move. If you're looking for this continuation move, what you should be more looking for is points where you would be wrong on a pullback, not necessarily reasons to get out on a move up. If you go for reasons to get out on a move up, this will probably have got you out quite quickly around 08s where you saw that first large order. But having considered the structure, having looked at the larger move that is potentially on for the T-note, this is where you can look at the 08s and think to yourself, well, yes, it's providing a bit of a hurdle, but what it's not doing is suggesting you need to get out. And as long as we're managing to sustain this move higher, as long as we're managing to hold above 03's area where you've got that little dip in volume, then you should be fine. The S&P, on the other hand, has moved up, broken 41.25. We saw a little bit of resistance, a bit of absorption coming in at 42.5, and we're now starting backing off. So from the S&P point of view, you'd want to be out as we come back below 41s, and then reassessing and considering the buy from around the 37 area. Back into that low volume, you could see that dip in volume between 37.5 and 36.5. Also, you can see a further dip in volume below 35.5. So if you are then trying to play along in the S&P, that's the area to be looking to buy from. And as you see from the chart, we get this pullback into that zone before we get one more attempt at 43, which doesn't again manage to break. The T-note at this point steadily consolidating, not sort of pushing on, no real aggression in this market, but this is exactly the point. If you're going to have a steady continuation type move, you don't need to see it exploding higher. More what you're looking for is a steady accumulation higher, shifts value up, and sets up a further continuation. Here's your S&P pullback. So this is where you'd now be looking, if you're not in a trade, to perhaps enter a passive continuation trade. If you are in a trade, this is the point to add and the place to have your stops below. So into the S&P now, looking for this steady move up. We've seen a couple of times 250 lot come on the offer. It's now been taken out and we're starting now to push up once more. The T-note, much like previous moves in the S&P, when the S&P first started to move higher and had bigger washbacks, the T-note on the other hand has stuck very much towards its highs. Trades back towards 6.5, not far enough to be willing to get out, not any reason to be worried about your position here. The S&P on the other hand puts you under a bit of pressure, but if you're maintaining that this is a passive entry for a further continuation to new highs, you're still in a safe position here. So now it's a case of waiting. That, you know, we're now 10 minutes after the event. This is where moves do become a lot more steady, and this is where the continuation moves then start to take hold. The S&P not having such a strong continuation argument is then more likely now to find it harder and harder to go higher, whereas the T-note consolidating back at around 6s is beginning to set up the possibility of a continuation. Your next area to be looking for, as I've said, is up towards the 16 to 18 zone. T-note starts ticking higher once more. S&P is moving off 37, so you're seeing some correlation here. That makes sense. Yeah, both markets should be correlating and continuing their moves higher together. The key bit now is going to be what happens when they reach their highs, and what we will see is the difference between the T-note and the S&P. S&P now back up towards its high, or getting up towards 41, so 41.25, remember, was the previous key level. Getting back there, we've just once again had this pullback off that zone. The T-note still remaining around 07 and still maintaining a degree of strength as well. S&P once more tries 41. Can it get through there this time? This is where if you have bought it on the way back, you'd be starting to doubt it a little bit. It's really struggling on any of these moves up, constantly finds a bit of a push back on it, constantly sort of running into these quick flicks back. So now once again up towards 41s, 42s, and it's really struggling to maintain a bid, to maintain the move higher. Every time they buy, the bid moves up and the S&P then gets pushed back. Quick move up towards 42.5. So this is where you're now looking for the S&P to keep on going. You're looking for it to break 43s and then keep the move going. Instead, we don't see that. Once more, you see resistance there. You see that it can't push through that zone. The T-note, on the other hand, now as well, is also starting to approach highs. Back up to 08s, and this is where you'd be looking, particularly with the T-note, having that little bit more strength and that greater scope for a continuation to the upside. You'd be looking for the T-note now to push through 8s, start the next leg of its move higher. So we have T-note bid at 8.5. Now, unlike the S&P, the T-note's not washing back very easily here. The T-note's able to trade 8.5, put a bid at 8.5, and then start trading into 9. Whereas the S&P has once more traded up towards 43 and once again pulled back from it. So by no means showing the strength that you'd be looking for. Once more back below 41.5. And this is where that continuation element really starts to play. The S&P then sits for a further 20 minutes between 43 and 36s, whilst the T-note continues for the next 20 minutes, pushing on and on and on, all the way up towards 15, eventually up towards 17. So yes, not perhaps as dramatic a move as the S&P, but in terms of the amount of size you can get, in terms of the distance that you can take the T-note relative to what a normal move is, this is still a rather large move for the T-note. It's a move that doesn't push back on you very much. It's a move that stays very stable and continues to drift higher and continues to play out that larger technical play. That's what you're looking for in a market like this. You're looking for that further continuation, that extra push. And this is where, if you've managed to get in on that first move, you can be looking to hold part of your position. And we're into a phase where we've got a lot more scope towards the upside. If you've taken that quick early trade, made your money from the smash and grab element of the trade, the getting in very quickly, then you can try and hold on to the rest of your position or a core position for the much larger run higher. What we eventually get is that the S&P eventually does trade up. It does eventually break 43 a long time after the T-note has already reached its highs, but starts to turn back. An hour and a half after the decision, the S&P has completely turned around and moved all the way back. At the same point in time, the T-note is still sitting up around the 14-15 area, maintaining value up in that zone. You can see right now the dynamic of how strong the T-note is compared to the S&P. T-note now pushing new highs, whilst the S&P is still falling back into the range. And all this comes down to the difference in their structure, the continuation element that the T-note has in it compared to the S&P's much more stable, much more range-bound market dynamic. And in fact, actually S&P tilted more towards a move to the downside, particularly on a failure to get above 41.5. So that was the result. Not perhaps the most dramatic in the T-note, but a much more steady move up that you'd be looking to try and capitalize on, get in, and then hold on to that position.